Welcome, everyone. Today, doing a quick interview with Bill Noll, tax attorney, CPA, and strategist extraordinaire. How you doing, Bill?
Doing great. Glad to be with you, Tom. Always looking forward to speaking to Traction Rio.
Likewise. So, since we have you coming up, and since a lot of things have changed, tell us what you're going to be talking about, and tell us what's been new and exciting on the tax and asset protection fronts.
Sure. So I would say one of the biggest changes to occur with regard to asset protection is this new rule, which takes effect in 2024, called the Corporate Transparency Act. So what I'm going to do is I'm going to talk about the fact that you will have to disclose an ownership interest in your company, an LLC, corporation, whatever the case may be. Having said that, I will talk about the fact that it's not actually a public record that's available for a civil attorney to look up or get a hold of online. The requirements for how to stay out of trouble but still meet the filing requirements is a big piece of the pie that I'm going to be talking about, both on our weeknight event and then also during the workshop.
Gotcha. Okay. And what else has changed 2024 in terms of?
Well, I'll tell you, as far as change, one of the things that I like to talk about is buying property subject to. And, although the mortgage rates have trended down a little bit in the last couple, 3 months, they're still dramatically higher than they had been. And so certainly people who understand how to find properties with sellers willing to leave the mortgage in place by subject to is an absolute spectacular opportunity these days. So that's something also that I'm going to try to stress as we're discussing what I'm going to say are kind of changes to the market. The tax laws, there's one single change, and it wasn't because the law changed, but there's a thing, I'll talk about it more on the workshop, called bonus depreciation. And so through 2022, you got to take bonus depreciation at 100% rate.
Mm.
And this is for certain types of portions of your real estate investment. So in 2023, the bonus was reduced to 80% of the amount. And then unfortunately now in 2024, it's going to be reduced to 60%. So there's a change on how much you can take by way of bonus. And so we're going to be talking about that during the presentation as well. Having said that, however, the big thing is most accountants don't understand how to allocate the purchase price to calculate depreciation in a way that maximizes your depreciation. And that's a big function of what I like to discuss and explain to people.
Gotcha. Interesting. So some ways I do find, people always want to lean on someone just because they have a title. I mean, and that sometimes works and sometimes doesn't. It's usually good if they know real estate, which is what you know. So, Bill, speaking of titles, but I do lean on your titles because you have good titles: tax attorney and CPA. Tell us about your specialty.
Well, really through I don't even know how to describe it, Tom, other than a confluence of circumstances. My father was a person who originally spoke to real estate investors in the 1980s, and he got together with a guy you and I knew really well, Al Aiello. And so as a result of that, the firm that I operate now, that my father founded, about half of our clients are real estate investors. So that's a very rare circumstance. The vast majority of accounting firms, they might have 2, 3 clients that theoretically are real estate investors. And when I say theoretically, that means they inherited a house from mom and they decided to rent it out. They're really not devoted to building wealth through real estate. And because of that type of experience, I'm dealing with real estate focused issues. And the other thing I like to remind people of, Tom, is, speaking at a group like Traction RIA, that is not my career. My career is running this practice. Like what I like to tell people is I eat my own cooking. Everything that I'm going to teach people in my presentations is stuff that myself and my staff are actually implementing for my clients. So we're not just talking theory, we're talking real world. And I think that's what makes my presentations different than some people who kind of put on a road show. They're at a different place every 2 weeks.
I agree. And speaking personally, Caroline and I have used your guidance and advice over the years and saved, I mean, we've saved a bundle. It's a small fortune when, and particularly when you start compounding it year after year. I mean, there's things
Absolutely.
you've told me a decade ago that, you think about that every year for 10 years, that savings, that starts to pile up. And some of them were simple in concept, but nobody seems to think about them that way. Other times things got a little more complicated, and I was always happy to have that steady hand and proper guidance, particularly as you like walked my accountant through how to set it up and make it happen.
Yeah.
That's one of the things I like to share with everyone at Traction Ray as well.
One of the things that I think most people find a challenge is the vast majority of people that do tax returns, accountants, I say that they have what's called the recording secretary syndrome. And that means they say, bring me your records and I will do your tax return. Well, guess what? At that point, the horse is out of the barn. Okay. The way to save money in taxes is evaluating and doing proactive tax planning. And I'm going to be talking about that, certainly, especially during the workshop on Saturday.
Perfect. So you've two events coming up with us. The first is an online training on Tuesday. It's Tuesday the 20, I don't want to say the wrong date. Tuesday the 23rd of January, 2024. And you're going to be discussing.
Oh, I'm going to be talking about asset protection. And I'm going to be talking about asset protection in the context of a couple different spheres. First, I'm going to talk about how to protect your assets, I mean, your personal assets from lawsuits, from the claims of creditors of your business. So that's part one. Next, I'm going to talk about how having this structure in place that I'm going to explain to people gives you the best opportunity to pay the legal lowest tax rates possible. And that's done through what we call a flow-through entity. We'll be talking about a lot. And then the last thing I'm going to talk about is why using our structure is advantageous, because you are much less likely to be the subject of an IRS audit. And especially with 80,000 people being hired by the IRS, audit rates will be dramatically increasing. So you want to have the best strategy to limit the likelihood of an audit. So that's what I'll be talking about on Thursday night. I'm sorry, Tuesday night.
The Tuesday night. There's yeah, they say a confluence of events that are happening right now between the changes, between the shakiness in the economy, between the uncertainty going forward, between the government hiring a crap ton of additional people to minions to go out and audit you. There's a lot of reasons that this is arguably more important than ever.
Oh, I agree. And especially, like I said, with this Corporate Transparency Act, is I don't know if you know this, Tom, but if you don't file the way you're supposed to, the penalty is $500 per day late.
Well,
A
that
lot of
doesn't take
money.
long to wipe out. $500 a day, huh?
Yeah,
I,
absolutely.
I wouldn't want to forget about that for the better part of a year.
Yeah.
Okay, so that's the Tuesday event. That's Tuesday, January 23rd, 7 p.m. online, totally on Zoom. You can go to tractionrid.com for more information. Now, Bill, then we're going to bring you back and have you spend longer and be able to teach even deeper on a host of different subjects as well on Saturday, the 27th, also totally on Zoom, so accessible from anywhere and applicable anywhere as well. What are you teaching on Saturday?
Excuse me. So first thing I'll do is I will be able to expand a little bit on what I'm covering on Tuesday, because, Tuesday, 90-ish minutes, you kind of have to do a summary. So I'll expand on that. And then the big thing I love to talk about during my Saturday workshops are the tax strategies that exist that you've got to understand if you want to build generational wealth in real estate. Okay. So these are strategies. And, I was talking to someone who's just getting investing in real estate, just starting to get invested this morning in my office. And I said, like, these strategies have been around for 120 years. The thing is, the vast majority of accountants don't know how to teach their clients how to implement them. So we'll talk about how to really show a loss, even if you're positive cash flow, how to show a loss when you hold rental income through the miracle of depreciation. We will teach you about building generational wealth. We will teach you how, when you are buying and selling properties, how not to look. The word that the IRS would use is like a dealer. So basically, you act as though you're an investor, even if you're buying and selling properties more frequently. We're going to talk about how to avoid what are called the passive loss limits. So, all of these things, as I said, although they are strategies that have been around forever, what's happened, I think, I'll give you an example. In the past, you have people buying and selling 10, 12 properties a year, okay? And if they're not audited, all right, they may not be identified to be treated as a dealer, okay? The thing is, now that there's going to be so many more IRS agents, what I anticipate is going to occur is that the IRS is going to start looking for returns and say, did an investor sell more than 8 properties in a year? If they did, we're going to look at it. And so what I'm going to identify are the ways to make it not look like you sold 8 properties a year. And there's a way to do it, and there's a way not to do it. And so we'll be talking about that. We'll also talk about, at one point in my career, before I returned to run this firm, I was a trial attorney. And so what I will talk about also is, even if you've got multi-millions of dollars of equity in your real estate, how to make it look on the public record as though you have no equity. I call it looking like you got a big hat, but no cattle.
Nice.
Because here's what happens. If it looks on the public record like you got no equity, no attorney's going to pursue a suit other than to get whatever insurance is out there that you got already. So we'll be talking about that as well. So, and I like to answer real world questions. We've done this on Zoom several times. And so I'll be taking questions for you through the chat box throughout the event. And I promise, and I think, Tom, you could say, I usually don't bore anyone.
That's the thing, Bill. A lot of people go, oh, wait a minute, tax and accounting and asset protection, that's boring. Except it's not, right? It's one, it's hyper important. Two, yeah, you do make it amusing. And I think hearing one of the reasons we do aggressive questions and answers every time we have you, Bill, is that it's really interesting to all people, not just the person getting their question answered, but everyone else. Here's the question. You're thinking through it in your own mind and seeing how that applies to you as well. So, no, that always winds up being an awesome part of the day as well. Great. Well, Bill, looking forward to it. So on Zoom, I'll have the links below this video, and you can always go to tractionradio.com and hit the calendar of events. We are on Tuesday, January 23rd, 2024, 7 p.m. Eastern time. And then Saturday, 9 a.m. Eastern time till about 1 p.m. Eastern time, where we'll do the full day session as well about wealth protection and building everything up to create generational wealth. So you can actually pass something on to your family. Something that I think has actually gotten more important lately. A lot of people joke about, I'm spending the inheritance, but it's probably better off that we pass it on if you really want your family to be successful and be able to get through those difficult times. Now's the time to be thinking about it.
And Tom, I'll actually show people how you can spend some of the inheritance, but still not have to pay taxes on it. So
perfect. Get the best of all worlds.
Excited. Exactly.
Awesome. All right, Bill, Noll, looking forward to seeing you.
Thank you, Tom. Looking forward to it myself.